Welcome to DeFi Crypto today. Our topic today is a sample how to create a portfolio that's very, very safe in DeFi. I know it sounds impossible, but a lot of people have been burned by the market crashes and Wonderland and million ohm forks, tomb forks, and whatnot. And they're wondering, well, what can they do to preserve their capital as much as possible and earn some income on that? So, what I'm going to show you today is a very conservative, very safe DeFi portfolio. Okay. What we're going to focus on is safety of capital. So, we're going to reduce the odds of losing our investment to a minimum. We're going to try to have as much income as possible. And we're going to also reduce our gas fees to a minimum. Because whatever is an expense, it reduces your yield on your portfolios. So if you have a small portfolio, this is for the portfolio we're creating today is very small. It's like $1,000 right now. Okay, and I created this portfolio just for this. Okay, so and then we're going to see week after week how the portfolio is going to do. We're going to update every week. We're going to see what kind of income we got. We might change some of our investments, and so it's going to become a series, a weekly series, and I want you to check it out. Okay, and see how this portfolio is doing. Okay, we're not going to turn this $1,000 in 20 million overnight, but we're going to preserve our capital. We're going to earn income on this, and the income that we are going to earn has to be superior to the current inflation rate, which in the US, they said it's about 7.5%. So we need to earn at least 7.5% just to break even with inflation. Otherwise, we're wasting our time. All right. So this is going to be a weekly series, and we're going to start doing our investments today. And week after week, we're going to look at how the investment is doing, and maybe we make new investments and so on. But we're only going to use the original 1,000 and right now $58. That's there. Okay, we're not going to add to it. We're going to just stick to this. Okay, and that's to give you an idea of what you can do. All right, and how to choose protocols for safety. A lot of people have issues with trying to find safe protocols. So we're going to show you my method. All right. So before we do our investments, we need to remember some risk management basics. We need to diversify our portfolio. We're not going to put all our money at the same place. So why? Even if it's a really safe DeFi protocol, it can always be hacked. Something can go wrong. Maybe the server goes down. Maybe their town, the town where the server is, I don't know, has a power outage. God knows. Many things can happen. Okay? So you don't want to put all your money only in one place. So we're going to diversify a little bit. We cannot diversify like crazy today because obviously we only have $1,000 to play with. And I don't want to make it too complicated in the first episode. After that, we're going to make some modifications week after week, and maybe we'll have several protocols that we're going to use. But today we're going to focus mostly on 2, maybe 3. We'll see how it goes today. All right, so diversify the portfolio. Have a solid base of stable coins earning interest. So these are examples of places where I like to put my stable coins to earn interest. So you get it. There's Anchor, that's on the Terra ecosystem, but we're not going to do this one today. There's Balancer, which I really like, and we're going to play with that today, and Yearn as well, which I really like, and we're going to play with today as well. Now, we're going to have at least 50% of our portfolio invested in stablecoins. Why? Because right now the market is pretty nasty. Okay, we expect that the market might crash further once the Federal Reserve decides to finally raise the interest rates. Probably a lot of people are going to panic at that point. So yeah, we anticipate that a lot of stocks and crypto tokens are going to drop in value. So we want to mitigate that by thinking ahead. Okay, we don't want to lose our whole portfolio. This is supposed to be a conservative, risk-averse portfolio. Okay, so at least 50% in stable coins, maybe more today. We'll see. We should have some blue chips. Blue chips are like Bitcoin, Ethereum, the big gas tokens like Avalanche and Phantom and Solana, that kind of stuff. Okay, those I consider to be blue chips. Okay, we could add Curve in there because it's such a major project. So like projects that have been around for a while, that have a lot of very big use case, and for which we think that the future is very bright. Now, we're going to make sure that we have no more than 10 to 20% in any high-risk protocol total. And we're not going to invest more than 1 to 5% in a single risky protocol. So if we decide to stick to 10% high risk, then we would divide that by 2 and put that 5% and 5% on 2 different risky protocols. Okay, I'm not sure if we're going to have time to do that today. That might be for next week. Okay. Now, these are basic things that I want everybody to always remember. Never invest money you need for a living. Don't put your rent money, your food money or whatever into DeFi. It's crazy. Why? Because it's very risky. Okay? Put money there that you don't need to live with. Okay? Not something you need to pay to pay the bills with every month or anything like that. This is extra money, okay, that you want to invest and hopefully make money for the long term. Okay. Now, only invest money you can afford to lose in risky projects. So we're going to try to, as much as possible, avoid very risky projects. And that's why we're not going to have more than 10 to 20% in the high-risk projects. But the money we put there, we need to be able to afford to lose it if things go bad. And it's not going to hurt us. That's why I'm keeping it at 10 to 20%. Okay? That's up to you how risk-averse you are. If you're very risk-averse, maybe you say, I'm not even touching them. 0%. If you're a little bit risk-averse, maybe you say 10%. If you say, I like to take a little bit of risk, then you can go to 20%. But that's up to you. It's your call. Okay, you are in charge. This is DeFi, this is decentralized, this is permissionless. Okay, you don't have to ask your mom, okay, what to do with this. You don't have to ask your banker. You don't have to ask anybody. You make your own research, you figure out what you like to do, and you do it. Okay, all I'm doing here is providing you tools and ideas, and then you figure out what to do with them. Now, nothing in this presentation is meant to be a recommendation to buy, sell, hold tokens of any protocol. Okay? They don't pay me. I don't care where you put your money. I'm just making just giving you my ideas. Okay? All crypto protocols carry high risk. Even the very safest ones have risks. Okay, be aware of that. What we're trying to do is find like the lowest risks possible. But even within a very low risk protocol, you can lose your money if you invest in a specifically higher risk token. Okay. It's like the stock market. The New York Stock Exchange is a very safe institution. Okay, it's highly regulated. It's been around over 100 years, I think, and it's fine. Can you lose your money and your shirt at the New York Stock Exchange? Yeah, if you buy one of the stocks there that are super risky, yeah, you can lose it all. It's the same thing here. Only invest amounts that you're willing to lose. So I'm repeating myself, but it's worth repeating. If you lose the money, are you going to die? Are you going to commit suicide? Are you going to get a divorce? Think about that before you invest. All right. So, how do we choose protocols? Well, we go to DeFi Safety. It's one of my favorite places to find ratings on DeFi projects. Why? Because these guys are extremely tough. Okay, they have 21 or 22 criteria that they use to evaluate projects. Okay, and these are coders, so they look at the code and they look at how the code is documented, and they look at the safety, and they look at the testing, they look at a bunch of stuff. Okay, and then they figure out the rating that they want to give. All right. So what I do is that I look at all their listings, and then I put them from highest first to lower. Okay, it's not showing enough. We're gonna scroll down a few times. They changed their interface, and now it's like display all the protocols. So obviously you want the best ratings, the highest rating as possible. The highest and the only one that has 100% rating at DeFi Safety is Balancer, and that's one of the two protocols we're going to use today. I really like Balancer. It's available on Polygon, Arbitrum, and Ethereum. Okay, we're going to use Polygon today. Why? Because the gas fees are ridiculously small. You pay a fraction of a cent. Why pay more? You're wasting your money on high gas fees if you have a small portfolio. Okay, that reduces your gains. If you have too many expenses and they don't cover, if your expenses are not covered by your earnings, well, what's the point? You're losing money. Okay, if you have a small portfolio, going on Ethereum is silly, because you're going to pay $50 to $100 per click you're going to do on the protocol. It's too much. So that's why. This one I chose for two reasons. First one, it's got the best rating, and it's available on Polygon, which has the lowest gas of all the blockchains. That's pretty good. All right. Now there's also Aave, which is quite good. Problem with Aave at the moment, last time I checked, they don't give enough interest on your deposits to cover inflation. So they're out at the moment. Maybe later it's going to get better. Curve is on multiple chains. Here it just says Ethereum, but Curve is actually on multiple chains. Sometimes you got better rates, but I don't want to make it I don't want to use it today. I want to keep it simple. What we're going to use instead is Yearn. There's Yearn Finance. It's available on Ethereum and Phantom. Now, Phantom has very low gas fees also. All right. And it's got a 93% safety rating. This is developed by one of my favorite developers, Andrew Cronje, who's a genius. And he really knows what he's doing. Okay, this project has been around a long time, and a lot of people are making money with it. Okay, and it's very sophisticated. It looks very simple when you go on it, but it's actually a lot of sophistication under the hood, and that's why it can give you sometimes very good rates. All right, so those are the two protocols we're going to be using today: Balancer and Yearn. Why? Because they've got very, very high safety ratings. Okay, if you look at what that means, you see here, this is the overall rating. Code and team 100%. Okay, they love the people that work there and the code that they write. Okay, next item is documentation. It's nearly perfect. Testing is has a passing grade. A passing grade is 77%. Could be better, but it's still super good. Security 96%, and access controls 89%. So overall, really, really, really good rating. Okay, so I'm not scared to put my money there. Okay. All right. So now we already chosen our projects. So let's go there. This is Balancer. Now we have to make sure we're on Polygon because it's got Ethereum, Polygon, and Arbitrum. Okay. We make sure that our wallet is also set for Polygon or Matic. So let's select our demo. All right. And right now I've got a little bit of Matic token and I've got $500 of USDT. Okay. And we're going to invest all that in here. All right. So as I said, we should have at least 50% in stable coins. Why? Because I expect more market crashes when the Federal Reserve actually raises interest rates, probably in March. Okay, so we want to preserve our capital. Now, the way it works at Balancer is that when you see a little green dot here at USDT, it means we can invest in any of these two portfolios. These are portfolios. So you've got this one as 4 stable coins. This one also has 4 stable coins. They're very popular. This one has $79 million invested, and this one $32 million. Now, the issue is the APR. The first one, although it's very popular, only gives us 5.29%, and that's not covering inflation. Inflation right now is charging us 7.5%. So if you're just holding your cash in your hands or at the bank and it's not earning you over 7.5%, the buying power of your money is shrinking. Okay. It's like money is burning by itself. Okay, so we want to cover that and hopefully do more than this. Okay, so that we have a net positive gain on this. So what we're going to do is we're going to look instead at this portfolio. Okay, so we've got 4 stable coins as well. And this one gives us a really nice 13.57%. We're almost at twice the inflation rate, almost. Okay, so we are beating inflation here, and that's a really good thing. Now we can look at the other portfolios that are available. Some of them give us really good rates as well. This one $29.99, and this one $30.55. Now, what we need to look at is what's inside those portfolios. So this one contains Wrapped Matic, USDC, Wrapped Ethereum, and the Balancer token. Okay, these are mostly blue chips and a stable coin, but it's more risky than this stable coin portfolio here, because the stable coins, they're stable. They're always going to try to stay very, very close to $1 each. Sometimes it might go up a bit and down a bit, but it's usually a very small percentage that's going to be off peg. Okay, unless the market goes totally nuts, which can happen, but it's rare. So today we have the choice. Do we want to put all our $500 that I have on Polygon in this portfolio? Or do I want to put some of it in a blue chip portfolio? Now we have 3 blue chip portfolios that give us very good yield. We have this one, AVAX, Wrapped Ethereum, and Sol, which gives us 32%. And then we have this one that gives us 30% USDC, Link, Wrapped Ethereum, BAL, and AVE. Or we have Wrapmatic, USDC, Wrapped Ethereum, and BAL. So it's up to us to choose if we want to invest in that and which one we want to invest in. Okay, now they are more risky because they're not all stable coins. They can go up in value and they can go down in value. Okay, that's something to remember. Also, it's called balancer because if you've got 4 items like this, each one will always stay at 25%, even if the price of them change. The program, okay, will buy and sell the tokens to make sure that the value of each token is only 25% of that portfolio. So it's rebalancing automatically like that constantly all day long. So that's something to keep in mind, okay? If Ethereum goes to the moon, it's going to sell the overweight of Ethereum and buy the other tokens instead to rebalance them. Okay, so we have to be aware of that. Okay, so in terms of capital gains, is it better to just hold those tokens outside this portfolio or not? Sometimes it is worth holding the portfolio, and sometimes it's not. Okay, so those are the risks you need to be aware of. Okay, so my plan today is we're going to be very conservative. We're going to put most of the money in this portfolio. And we're going to put some money in one of those higher yield portfolios here. So let's start by investing here, making it simple. This one is easy to do. So we click here. Okay, to start, what we have to do is click on Invest here. And as you can see, I've got 0 USDT, 0 DAI, 0 Mimetic, but I have 500 USDT. And right now, my plan is I'm going to put 400 USDT in this portfolio. And the other 100, I'm going to put in some of the higher yield portfolios that are available. Okay. So we're going to write 400. Okay. Now what's going to happen, it's going to take the 400 and it's going to split it amongst these 4 tokens. Okay. So basically we're going to end up with 100, 100, 100, 100 each. Okay. So we'll preview, approve USDT. Need to confirm in MetaMask. Okay, now that it's been approved, we need to actually invest. So we click on Invest now, and we confirm in the MetaMask as well. Yes, confirm. Okay, so as you can see, the 400, it's almost 400. There was a transaction fee that was collected, a few cents, 7 cents. As you can see, most of the other ones have about $100 deposited in it. Okay, so if we go back to the main page, it should show our portfolio right here. Yes, so we have a 400 invested, and it's going to earn us 13.58%. Now, the earnings we're going to be able to collect up here. When we click here, it shows our earnings, and we can claim them, and they get airdropped into our MetaMask wallet. That's what happens. Okay, so we have to make another investment. We're going to invest $100 into one of these other portfolios. So the one I would like to choose is this one. Why? I just like these tokens. You can choose another one. Okay, I like Matic. I like Ethereum. BAL is the native token for Balancer. I think it's good enough portfolio for me, and it's giving me almost 30%, which is pretty cool. If you don't like that one and you want a high yield, you can also take AVAX, Wrapped Ethereum, and so that's another good portfolio. All right, so at the moment, I only have USDT in my wallet, so I need to convert it to one of these tokens. So to do that, we can go to trade, and we're going to go here, and it says I've got 100 USDC. All right, so we're going to max it. And actually, we do need the Wrapped Ethereum, so you might as well swap it for that. Yes, we confirm. And we confirm in MetaMask as well. So we just have to wait for the transaction to finish. We're going to go back to invest. Now, as you can see, we have Wrapped Ethereum now available because of the green dot. So we could invest in any of these that have the Wrapped Ethereum green dot, and that's fine. You choose the one you like. So I'm going to go with this one. Okay, so we're going to click on invest again. And this time I want to go to Wrapped Ethereum, and it's going to split it like this. Okay. And it's going to be worth $99.95. So we hit preview, and we approve, and we confirm. So waiting for confirmation here, and then we need to invest. Confirm in MetaMask again, and there we are. Okay, so a few seconds going to be ready, and then we can look at our portfolio on Balancer on the main page. So our investments are going to appear at the top. All right, so we get the fireworks, so it's all done. Return to main page. Let's go here instead, and it should refresh. There you go. So right now we have $500.12 invested. Okay, and we're going to earn 13.58% on our stable coins and $29.95 on our blue chip portfolio. Okay, so right now, remember the goal was at least 50% in stable coins. So right now we're at 80% in stable coins and 20% in blue chips, which I think is a reasonably good portfolio. Okay, of course, if the market crashes, this one will be affected. It could go down lower than 100, but part of that is mitigated by the fact that we're getting 29.95%. And also, these are long-term holdings, okay? In a year, the market might be better, okay? And we might be able to make a capital gain off of this, okay? You have to think about that as well. Okay, so we're done with Balancer on Polygon. Now we're going to go to Yearn on Phantom. So this is Yearn, and we're going to switch our MetaMask wallet for Phantom Opera. Okay, and if we look at our assets, we've got one Phantom and we've got 500 USDC. Okay, so we have what I like to look at is the vault section. Sometimes I look at the Iron Bank. It depends if the rates are better. Right now the rates are a lot lower, only 5% something. and that's not enough to cover inflation. So sorry, Iron Bank, but we're going to stick to the vault. So in the vault, the top three are Boo at 28%, Spell at 21%, and Dola at 21% as well. Now, Dola is a stable coin, so we could earn 21% on this stable coin. We could also, decide to buy some Boo token or some CRV token, which is definitely a blue chip. This one, Boo, it's almost a blue chip. Spooky Swap is one of the largest dexes on Phantom, so I guess it's possible to call it a blue chip if we want to. So what I'm planning to do is I'm going to divide, we've got Dola here giving us 21% and MIM giving us 14.92%. Those are two stable coins with the highest rates. They both beat inflation, so I'm going to put a bit, about 200 each. So the capital should be preserved. We're going to get a high yield return on this. And the rest, well, we're going to choose, we're going to do a little bit like the balancer portfolio. We're going to keep 80% in stable coins and use 20% in blue chip. So let's go with this. So we're going to start with Dola. Okay, so let's go to Spooky. And we're going to take some money that we have. Okay, now we have USDC. I wasn't connected. All right, so we're going to choose this. So we've got USDC, and I want to see if I can get some Dola. We can. So I'm going to click on the little plus sign here so we can display it in the wallet. So Dola is going here, add the token. Select that. So we got from USDC to Dola. We're going to go 200. And we're going to get 199.57. So it's approximate. And we're going to approve. Confirm in MetaMask. And we're going to swap. Okay, it looks like it's swapped. Now we need to swap another stable coin. The other one that I wanted to buy is MIM because the rate is pretty good at 14.92. That's pretty much double the inflation rate. So I want to take advantage of that. And we're going to change this for MIM. So we got MIM here. I'm going to add the MIM to our wallet because it's not there yet. Okay, so click here. And again, I wanted to put $200 on that. And we're going to swap. Confirm. Okay. All right. Now, we also wanted to invest $100 or 20% into a blue chip token. And if we look here, we got Boo, got Spell, we got Curve. Curve is the safest one in my personal opinion because Curve has an excellent rating over here. Curve right here got 93% rating at DeFi safety. So I want to put some money into that. Okay, so let's do it. Let's have some Curve. Right here, we're going to add that to the wallet. Click here. And I believe there's $100 left. So going to give us 31 Curve tokens and we swap. We confirm in MetaMask. All right, so we should be all done. Well, it's still processing over there. But anyway, we can start here. If we refresh the page, it should show us the amounts that are available to deposit right here. Okay, so let's go. All we have to do is deposit these three things. So let's do that now. So we're going to deposit $. I'm going to hit max. And we're going to approve and confirm. Once that's done, we can deposit. Okay, now it's ready for deposit. So we click that. Confirm in MetaMask. And we just have to wait a bit. Okay, so that's done. All right, so when it's deposited, it shows up here. And now we need to deposit curve, and we're going to deposit MIM. So same process, hit deposit, max, approve, confirm. One of these days, I'm going to be able to do this with a single button, I hope. It takes forever. All right, so it's confirming this stuff, and then I'm going to be able to hit deposit. Deposit. Confirm. Okay, so 2 out of 3. We still have MIM to deposit, and then our portfolio is going to be ready, and then we're going to have a look at it on DBank so that we know what we have in our portfolio. Everything should appear there, hopefully. Typically, it's pretty fast. It should have the information almost instantly, but sometimes there's a delay. Okay, so that's done. And finally, we've got MIM right here. We're going to deposit that as well. We'll go max, we'll go approve, confirm. Let's go. Okay, and we wait for the deposit button to appear magically. Okay, deposit. Right, and confirm. There we go. And after that, all our investments are done for today. We didn't do it that much, but it takes a while with all these clicks and small delays. You know, a minute here, a minute there, and that adds up. And we're lucky because on Ethereum, it would take way longer, way longer, on top of paying a ton of gas. So, all right, we're almost ready. Okay. All right. So we followed our plan. Okay. That's one thing that a lot of people don't do. They don't plan. We have a plan. Our plan is at least 50% in stable coins. In this case, we're putting 80% in stable coins. And we want to beat inflation. So we're depositing our assets in pools that are giving us more than 7.5%, which is the inflation. That's to beat that. Anything less than 7.5% we don't do, because what's the point? We're losing money anyway. All right. So now the thing is, we have to watch these rates because they will change according to supply and demand. This is not fixed by any stretch of the imagination. Okay. So watch the rates. If the rates drop too much, okay, if these rates go below 7.5%, then we need to make changes, okay? And that's what we're going to see every week. We're going to look at our portfolio, look at its performance, see if we're happy or not. And then we decide, are we making any changes? Did we find something that's going to be more profitable? Okay, so that's what we're going to do every week. All right, so now let's have a look at the entire portfolio. We're going to refresh here. All right, so as you can see, Bouncer appears right here and Yearn as well. And they both have approximately $500 each, which is exactly what we wanted to do. All right, so have a few pennies here and there in our wallet. And then it shows you Bouncer, the two pools where we invested our money, $400 in the stablecoin pool and $100 in what I like to call the blue chip pool. And here at Yearn, well, we've got 200 deposited in MIM, 200 in DOLA, and about almost 100 on CRV, minus whatever fees we paid. So we created our first portfolio. All right. This is a very conservative portfolio. If the market tanks and Bitcoin drops 50% tomorrow, most of these assets will not tank. Okay. At least 80% of them will stay pretty much stable. And we're still going to earn more than the inflation rate, which is great. All right. So what's going to happen in every week is that we're going to look at this, and then we're going to see if we can find better investments. Okay. If the rates change too much on our portfolios and they don't beat inflation, then we need to change them. And if we find an opportunity that pays better, we might want to change also. All right. So I invite you to come back every week and watch how this portfolio develops. And if we're going to make money out of this thing or lose money out of this thing, and see how well it withstands market conditions. All right. So that's it for this video. If you like this kind of stuff, please like and subscribe. Don't forget to ring the bell. Download the free book. All you have to do is type your name, your email address, and hit the submit button, and then you get a big fat button that says download the free book. If you miss that button, well, that's fine. We're going to send you an email with another big fat button that says download the free book. And if you don't want to download the free book, you go to Amazon, you pay $5.99 to Jeff Bezos, and Jeff will send me $1. See ya.